What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol ORCL for Oracle Corp. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, I need to let you know about an earnings announcement they gave us after the bell today. So let's clean up the drawing set here, start from scratch, and of course, turn on the extended hour session to see what's going on with that number. So my goodness, look at this thing. Absolutely a moonshot here. We'll go ahead and call it that, given the nature of the after-hours move here. Big move to the upside, right? And by all intents and purposes, it's very likely we'll open on a gap up for tomorrow's session. Just remember, a lot can change between now and 9:30, so please adjust the levels accordingly and reconsider the chart as we get closer to the bell. So we want to know where the overnight high is, and we want to know where the anticipated opening print is, and we also want to know where today's high of day was, way down there, closer to about 90 bucks. It's currently sitting on an $8 gap up on something sub 100, so let's just call it, for round numbers sake, an 8% move to the upside here. Very, very impressive in the post market. So let's turn that off, take a look over at our daily time frame, and just see what's kind of going on here. Firstly, I would note that we're kind of gapping up into this all-time high resistance. Now, that's very important to note, because if we break this, I would imagine it brings in a flood of buyers, noting we would be making new 52-week highs, right? That, generally speaking, can be a draw for some people, at least. I'm not saying it's right or wrong, but can be a draw for people to buy a stock. So watch out for that as potential. If we start taking out 99, obviously the target would be 100 psychological, and then we'll see what happens after that. To the downside, right? This is where our gap rules kind of come into play, and we'll know they're coming into play if we do something like this. We have a framework, right? So this is generally what we say as scenario number one would be the gap and trap. If we open here, fail to attract new buyers up and over that overnight high, remembering it's also very close to the all-time high here, then we look for shorts back down through the open to essentially start filling the gap all the way down towards 90. Now, given the magnitude of this gap, I'm not saying that it will fill all in one day. It would be very, very unlikely for a daily candle to look something like this to the downside here inside of Oracle. Could it happen? Sure, anything can always happen in the marketplace, but in terms of probabilities, I would say that's not up there in terms of a likely scenario. So what would be? Well, firstly, let's take out the Fibonacci here and look for a half gap. Before I do that, actually, I've been sort of on a roll here with calibrating my eyeballs. That does not look like a 50% retracement of the gap. However, I would be willing to bet it's closer to the 61.8. So if we now check with the Fibonacci's, would you look at that? I was kind of smack in the middle. So the eyeballs are slightly off today, but you get the gist, right? If we start coming in, I would really watch out for this shelf of structural support from in here, then flip to resistance on those two inverted hammers. That to me would make sense as a downside target. Is that still pushing it to the downside? Absolutely. Again, if you just think about the average range here inside of the stock, I'm just looking at some of these larger days to the downside. Let's hover the cursor here. We're looking at a $2.91 range here, a $2.73 range. So let's just call it a $3 average range. That would bring us to about 95, correct? Something like this. And it's also kind of at this area, or breaking through that area. So in my estimation, I would start watching out for that, to be quite frank with you, as the first downside target, and then monitor for continuation after that. If in the first place this does unfold, right? There's nothing saying that it can't do this, put in a bullish wedge, right? Some sort of ascending triangle, break that all-time high, and continue to run. As a matter of fact, given the nature of the gap up, given the location, remember 52-week highs here, I would probably be watching out for something like that and not just immediately short this thing thinking that we're going to get some sort of gap fill. So those are my thoughts here inside of Oracle. We have two scenarios to really watch out for. I would say be cautious in getting in on the short early. I would really wait for some confirmation, aka breaking down firmly through that opening print if the move is higher in the first place, and then putting in some acceptance candles, right? Maybe it's a bear flag down here, maybe it's a descending triangle. Just price acceptance underneath the open would give you more confidence that the move could potentially be lower into some of these targets, which we mapped out and talked about in detail on today's session. So with all of that being said, I'm going to wrap up the video. If you enjoyed it or learned anything new today, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.